Hey guys, welcome to your on YouTube channel Men's Charts. Myself Tanya Singla. So first of all, please like, share and subscribe my channel. For subscription, you are very well known that you are required to press on the bell icon. Today's topic of discussion is money. Money. In today's era, everyone is very familiar to the word money. Without money, we cannot purchase anything in the market. In the world, we require money for our daily things, for fulfill our daily requirements. We need money. Without money, we can't fulfill those requirements. So, exchange is of central significance in human life. An individual does not produce himself all that he needs for his existence. One depends upon many others for the satisfaction of his want. This implies interdependence. Interdependence implies exchange, and money is a thing which is commonly accepted as a medium of exchange. For example, a rupee in India is a money as it is a commonly accepted medium of exchange. Here likewise, a dollar in USA is a money as it is a commodity accepted medium of exchange. We can see that money is defined as an instrument that serves as a medium of exchange, store of value, a measure of value, and a standard of deferred payment. So this is known as money. Now, before the evolution of money, one thing is common in our, especially we can see in our India, barter system of exchange. What is barter system of exchange? Barter system of exchange is a system in which goods are exchanged for goods. There was not a reason of money at that time. People usually to fulfill their daily needs, exchange goods for goods. For example, we can say that in a village community, in old days, a cobbler would make shoes in return for wheat from the farmer. A farmer work would get gains and as a reward for his labor, and so on. The system of exchange was known as barter system. But with the multiplicity of want and greater need of exchange, barter system proved to be an inefficient system of exchange. It is that the man invented money, a thing that was commonly accepted as a medium of exchange. Initially, metal coins of gold and silver were introduced. Subsequently, alloy metal came to be used for a coinage along with paper money. And now is the age of plastic money. Even though we can say that digitalized money, but why we say so? Because we transact from bank to the point where we spend the money. For example, we see that nowadays we do online shopping. What we require to do in online shopping is that we should have our credit card, or we can say debit card, through which we can do online shopping by sitting at our home. So in the form of cash card. Thus the origin also evolution of money is related to the need to facilitate exchange. Hence it come to be defined as a thing that is commonly accepted as a medium of exchange. Now there are some drawbacks of barter system through which the origin of money came out. The first drawback of barter system was double coincidence of want. Double coincidence of want is a precondition for a barter system of exchange. Double coincidence of want implies that good is possession of two differentiate individuals are needed by each other. But it is not always so simple. It is not so simple to find a person who wants your horse and at the same time possesses a cow that you want to buy. Accordingly, under the barter system, exchange remains extremely limited. Money as a medium of exchange has helped overcome this problem of double coincidence of want. Now, lack of common unit of value. What is the value of your car? You can reply 5 lakh. Can you give the same answer in a barter system of exchange? Certainly not. Isn't it? Under such a system, your car would be valued in terms of horses, cows, or buffaloes. Simply because there is no money or a common unit of value, evolution of money has offered to common unit Evolution of money has offered a common unit of value and therefore a system of accounting. Now, lack of a system for future payment or contractual payments. These days, you hire a worker and strike a contract to pay him, say 5,000 per month. What do you do in a barter system? Would you decide to pay him in terms of table or chairs, in terms of rice or wheat, in terms of drugs or chocolates? Contractual payments or future payment would certainly be very difficult under barter system of exchange. Evolution of money has facilitated contractual payments. Now, lack of a system for storage and transport of value. Transfer of value. Saving and transfer of fund are crucial element of man economic activity. You save for investment as well as for your future security. Because of lack of money in the CC economy, saving is possible only in terms of storage of goods, but it involves storage costs as well as the fear of capital loss. Further, what happens if you are to transfer your saving from one place to another? Obviously, you have to transfer the goods, which again is a difficult task. Besides being expensive, evolution of money has made storage and transfer of value much easier. Now, forms of money. We have different forms of money: fiat money, fiduciary money, full bodied money, and credit money. So let's start with the fiat money. Fiat money refers to the money which is issued by order authority of the government. It includes all notes and coins which the people in a country are legally bound to accept as a medium of exchange is known as fiat money. Now, what is fiduciary money? Is the money which is accepted as a medium of exchange because of the trust between the payer and the paid. Example, checks and are fiduciary money as these are accepted as a mean of payment on the basis of trust, not on the basis of any order of the government. So it is clear what is fiat money and fiduciary money. Now, full bodied money refers to the money in terms of coin whose commodity value is equal to the money value as and when these are issued. For example, a rupee coin during the British period in India was made up of silver. Commodity value of the coin was equal to its money value at the time of its issuing, or the market value of the silver contained in the coin was equal to 1. Now, what is credit money? Refers to that money of which money value is more than commodity value. For example, what is the market value of the metal that the rupee coin is made of in India? Obviously much lower than the money value of the rupee coin. Otherwise, people would have melted the coin and sold the metal in the market at a price greater than 1 rupee. So this is known as credit money. So all these are the forms of money. Now we'll study commercial banks. So anyone know the meaning of commercial banks here? Commercial bank. A commercial bank is the financial institution. A commercial bank is the financial institution which accepts deposit from the people and offer loan for the purpose of consumption or investment. According to Indian Banking Companies Act, banking company is one which transacts the business of banking, which means accepting for the purpose of lending or investment of deposit of money from the public repayable on demand or otherwise and withdrawable by check, draft, order or otherwise. So this is the definition given by the Indian Banking Companies Act regarding commercial banks. So primary function of commercial bank is accepting deposit and advancing loans. There are two main functions which are performed by the commercial banks. The primary function of commercial bank is advancing loan. Bank advance loan mostly for productive purpose against some collateral security. As a source of fund for investment, bank play the role of money creator or credit creator. They make advance many times that their cash reserve. Accordingly, banking has widened the horizon of expenditure. They have added new dimension to the role as a creator of money, and the bank have proved themselves as an against of economic growth. So the second function was advancing loan and accepting deposit. A bank accepts deposit from the public. People can deposit deposit their cash balances as check deposit or non-checkable deposit. Checkable deposit are those against which check can be issued and anytime. Non-checkable deposit are those against which check cannot be issued and therefore money cannot be withdrawn at any time. So these are the two primary functions which are performed by the commercial bank: accepting deposit and advancing loan. Now after studying the commercial bank, now a second bank which we will gonna study is central bank. Central bank. So every central bank has one function. It operates to control economy, supply of money and credit. This is the definition. It is an apex bank of the control that entire banking system of a country. It is the sole agency of note issuing in a country. It serves as bankers to the government and control the supply of money in the country. In India, Reserve Bank of India is the central bank. In England, Bank of England is central bank, and in America, Federal Reserve System is operated central bank. Although the first central bank in the world was set up in 1668 in Sweden, effective central banking come into being in 1694 with the establishment of Bank of England. There is no standard definition of a central bank. The definition depends on the function it discharges. However, a common function that the central bank performs in all economy of the world is that it controls and manages the flow of credit and supply of money in the economy. So this is all about the central bank. Now, what are the functions performed by the central bank? There are overall 7 functions which performed by the central banks. Bank of issuing note. Central bank of a country has an exclusive right of issuing note. This is called currency authority function of the central bank. Actually, till the beginning of 20th century, the central bank was known as bank of issue. The note issued by the central bank are unlimited legal tender. Now, second function which is performed by the central bank is bankers to the government. Central bank is a banker, agent and financial advisor to the government. As a banker to the government, it manages account of the government. As an agent to the government, it buy and sell security on behalf of the government. Or as an advisor to the government, it helps the government in framing policies to regulate the money market. The central bank also offers loans to the government against government security or treasury bills. In a situation when the revenue falls short of its expenditure, the government often seeks loans from the central bank. This is called deficit financing through borrowing from the RBI. Now, bankers bank and supervisory role. The central bank, the bankers bank, also plays a supervisory role. As a banker bank, it has almost the same relation with other banks in the country as the commercial bank has with its customer. It accepts deposit from the commercial bank and offer them loan. The rate at which the central bank offer loans to the commercial bank is called repo rate, which we are gonna study thoroughly. It also called bank policy rate. The term repo is derived from repurchase. Loans are offered by the central bank by way of repurchase of government securities from the commercial bank. The rate at which commercial banks are allowed to park their surplus fund with the RBI is called reverse repo rate. The standard practice is to keep reverse repo rate lower than the repo rate by 1% in the supervisory role. Now, lenders of the last resort. We know commercial banks create liabilities, demand deposit many times more than their cash reserve. The arrangement works fine so long as people have confidence in banking system of the country and they live up to banking expectation that all depositors do not show up at single point of time to withdraw their deposit. However, there may be occasion when a bank suffers crisis of confidence and people go crazy to withdraw their deposits. The depositors are gripped by the fear that the bank may run out its cash reserve. It is in such a situation that the central bank acts as a lender of last resort. Not only that, it offers loans to the bank in crisis, but also stands as a guarantor of saving its solvency. Custodian of foreign exchange. Central bank is the custodian of nation foreign exchange reserve. The central bank not only maintain foreign exchange reserve but also exercise manage floating to ensure stability of exchange rate in the international money market. Now, clearing house function. Central bank also perform the function of a clearing house. Let us take an example to understand the function. Supposing a bank A receive a check of 10,000 drawn on bank B and bank B receive a check of 15,000 drawn on bank A. Both bank A and B have their account with the central bank. The check of both the banks are cleared through their specific account with the central bank. This is how central bank act as a clearing house. It avoids transfer of cash between the bank and reduce the requirement of cash reserve. Control of credit. The most important function of central bank is to control the supply of credit in the economy. It implies increase or decrease in supply of money by regulating the creation of credit by the commercial bank. The central bank need to control the supply of money to cope with the situation of inflation and deflation. During inflation, the supply of money is restricted, and during deflation, the supply of money is liberalized. So all these are the functions of central bank which are performed by the central bank. Thanks for watching video. Please like, share and subscribe my channel.